Hello, perpetual students. Gary Dewell here. I wanted to do a quick review of this article on environmental, social, and governance companies. These started out as SRI, or socially responsible investing companies, and people are waking up to the fact that just following quarterly profits is an insufficient measure of how good a company is. For long-term performance, they need to take into account what they call environmental, social, and governance factors. And as you probably all know, one of the main drivers of fund value is demand. Right now, lots of demand, not much of it rational. So it's good to see this shift to ESG funds. So here's the whole idea. ESG funds supposedly meet environmental, social, and governance tests. Environmental tests, of course, are that they don't have to externalize costs in order to make money. Those externalized costs are, air, soil, and water pollution. If the company was internalizing those costs, it would not have to emit any pollutants to be profitable. A good example of social ranking is how they treat their communities and their tax obligations, and how much they abuse their relationships with Congress in terms of lobbying for legislation that will make them profitable but are injurious to the rest of us. Governance refers to how they run internally. Do they hire women? Do they pay their workers, based on equivalent work? Do they pay their workers similarly, regardless of gender, age, sexual orientation, religion, so on? Do their boards have a balanced representation? Is their board overlap with other competitors or partners? Right now, there's way too much board overlap, and these guys keep awarding each other giant compensation packages. So funds had doubled. Investment in socially responsible funds had doubled over the last 3 years. They're still only about 1% of the total market, but of the 250 billion globally that is invested, the U.S. market is about 20% of that total. BlackRock has some great socially responsible or ESG ETFs, which are exchange-traded funds, which essentially are funds of funds, and supposedly very inexpensive because they are managed by algorithm. So again, remembering that demand is what fuels share price, or ETF values. It's encouraging to see that the public is awakening to the fact that a company's only obligation is not to generate profits for shareholders. That's strictly a short-term view, and we're seeing much evidence of that playing out today. If Morningstar has some very good tutorials on ESG investing. And you'll need it because there's over 500 funds focused on sustainability. I don't know what the quality of that focus is, but if they have quadrupled over the last 3 years, I expect a continued exponential growth in both values and investing in that sector. Also encouraging is that people are realizing the bottom line is affected by ESG factors. It's not, they're not soft or, notably liberal leanings. They make a difference to the bottom line. And right now, more funds are flowing into ESG funds than any other fund sector. So here, still less than 1% of the overall market, just a drop in the bucket, as he says. So a great opportunity for growth. In addition, as we boomers pass our assets on to our kids and grandkids, nearly all millennials think sustainable investing is important. And I think the ESG funds have done a good job of educating millennials that there is no longer a financial trade-off for making money and doing the right thing. And I've always believed that, these criminals, especially in the financial sector, with the same amount of effort and investment, they could make legitimate profits without having to steal them. So what are the cons? There's always a downside. As anyone who knows me says, there is no perfect solution. I've had this experience myself trying to dig into ESG ETFs. There's no standard as to how to measure this, especially here. Europe is doing a pretty good job. But how do you find these things out? Companies don't have to disclose how diverse they are or what their pay practices are. How many ESG factors are you going to require, and how do they interact? Is it enough that a company have a female CEO? Is that enough? Or that the board is half women? It's hard to tell how much weight each one carries. I lean toward the environmental aspect of it, because that's where the biggest costs are being externalized right now, especially in the fossil fuel industry. So this will be worked out as we collect more evidence. Again, remember, this is only 1% of the total market. And as these funds continue to grow exponentially, we'll be able to gather more data to see which of the ESG scores matter the most. One thing this article doesn't mention is B corporations. B corporations go through somewhat of a gauntlet to be allowed to carry that designation, and the questionnaire they complete is public record. So that might be a good indicator of ESG compliance. Well, I hope this was interesting. If you would like a copy of this article or other relevant articles, feel free to email me, and I will send it to you. Well, by the way, the view behind me is not a virtual background like you get in Zoom. That is a beautiful sunset that I have not seen for a couple of weeks because of the smoke. Be well, stay safe, and we will talk soon.